Welcome back. You're with the home loan special edition of Money, Money, Money. So does it make sense to move to either a different lender or to ask your existing lender to switch your loan to a lower interest rate regime? Adil, the math for us now, please.
Right. So from a mathematical point of view, like Mr. Mehta said, the larger the principal outstanding, the longer the tenor left, the larger the difference between your old rate and new rate, the greater is going to be your saving. So let's take, for example, case one, right? So it's a 30 lakh loan. That's the average loan size we see on Bank Bazaar. It's for 20 years. And let's assume today you're paying 10%. Now, if you were to refinance and now get this at 8.6%, so 10% has gone to 8.6% on a 20-year, 30 lakh loan, your EMI saving per month works out to about 2,700 rupees, which over a 20-year period, right, is a little over 6 lakhs.
Okay.
So that's a substantial amount. Now, think about the case two. So you've taken this loan for 20 years, 30 lakh. You've been repaying it for 15 years, and there's only 5 years left of that loan. And let's say that approximately there's about 13.5 lakh of principal outstanding on that original 30 lakh loan. Now, let's assume you're paying 9.1% and you're switching to 8.6%. So all three conditions have been, benefits have been reduced.
Watered
so
down, yeah.
20 years has become 5 years, 30 lakh has become 13 lakh. The difference
the rate of interest is, the difference is only now
it's only 0.5%.
50 basis points, yeah.
So now the difference in EMI is, roughly about, 280, 300 rupees.
Okay.
And over a 5-year period, this works out maybe to about 20,000 rupees. And 10,000 of this is anyway going to go in your processing fee. So you need to sit down and just work out the math. And today there's so many tools available online wherein you can sit with an EMI calculator and, figure out what these numbers are.
Okay, does that roughly make sense to you as well, Mr. Mehta?
He's absolutely right, and I think that's the most important thing as to how it really fits in and what ultimately is your objective to this entire thing. Because, and the math is very clear, ultimately it all starts is what EMI you can afford. See, interest rate is only one aspect of this entire thing. I can get an 8.6% interest rate, but if my tenure is only 15 years, then obviously my EMI is going to be on a higher side.
I can service that kind of thing.
Exactly, and instead of that, I may have a 9% interest rate, but if I get a 25-year loan, then my EMI comes down sharply. And it helps me from an overall budgeting exercise. So I think those are all the key things one has to look for, and this an individual has to do. And as Adil said, you have a lot of online calculators today available where you can do this math, and it's fairly simple, I would say.
So finally, coming down to some last thoughts, as a new borrower, I'm really spoiled for choice right now. I mean, banks are vying for my attention. There are housing finance companies which are now willing to offer almost similar rates. Of course, DHFL has also announced a pretty massive rate cut, and you're matching the best rates out there. So for a new borrower, what are the things that he or she should keep in mind while selecting on his or her lender?
See, first and foremost, I think, is what is the loan quantum I'm eligible for? That is the most important thing. Along with that is what are the EMIs I'm going to support, followed by what is the choice I want to go with, whether I have a banking relationship. Fourth would then be interest rate in my mind, because the most important things are this, basis which you will also decide what kind of property you want to buy. And usually we always see that, many times people come and say, hey, look, how can you look at higher eligibility of the loan? And eligibility of the loan has got nothing to do with interest rates. That only come at a later stage. The first is that. So determine that. Then you identify, which institution meets your requirements, the tenure of the loan, and when you put all those things together, you can go and take the decision.
Okay, and other final tips and thoughts from you as well to make the best of this interest rate environment?
Yes, so I think Mr. Mehta has in detail explained the financial implications of the choice being made. All I want to say, right, today information is free. On Bank Bazaar, we have 50 lenders. Anyone you can think of, right? The leading NBFCs like DHFL, the NHBs, the banks. I think literally you take 2 minutes of your time, you run a search on your mobile phone, and this information is in your fingertips. Make use of that information, right? So today we're a society where information is free. Make use of that on your mobile phone. It takes 3 minutes.
Okay, all right, gentlemen, we'll wrap it up on that note. Thank you so much for taking out the time and explaining the home loan math and the dynamics to us. Hopefully, this will be of a lot of use and help to our viewers. That's it on this week's episode of Money, Money, Money. We'll see you again next week with a different topic.